We recently read in one of your investor updates, you wrote that it's a stock picker's market. So to close out this episode, we want to do a deep dive on one of the companies that's really interesting you, or perhaps is a position in your portfolio, and we asked you to bring that today. So we'll step through it. Let's start at the top. What is the company and what does it do?
So the company I'll talk to you about is called CTS Eventim. So they're like the Ticketek equivalent of Europe. Small cap, German listed business, founder owned and led. He owns over 30% of the stock. In Germany, they have over 80% market share. In Italy, Switzerland, and Austria, they've got over 60% market share. This is a great network effect business. They basically, interestingly, in Europe, as a background, and when I go to a concert now, you put everything in your Apple Wallet, it's all digital, Europe's very behind on that. That's only just coming in, and these guys,
Wow.
have the technology, have put in the systems to be able to enable that, which is very margin enhancing as that gets rolled out. It was a business that we owned pre-COVID, and then the valuation got too expensive for us, and we couldn't see the catalyst, so we sold it. And then in COVID, ticketing, entertainment, live entertainment, the worst thing you could possibly, own into COVID, because no one can go to anything, and we couldn't see the light of when we would ever get out of lockdowns, etc. And so the business got really sold off. And so basically during COVID, the stock got massively sold off. We knew it. We knew the company well. We speak to them regularly. Our view was that concerts and live entertainment wasn't dead forever. So we went back into the stock. I mean, it's got a net cash balance sheet. And what's interesting is that artists, like touring, artists, they make all their money. They don't make it from CDs anymore. They make it from going on the road. And that's, so they need to go on the road. And with COVID, they were off the road for 2 years. And so they're all out there now going on tour. And so what happens with the bigger acts is that they start in the US and then they go through Europe. And so lots of them, you've got, whether it's Taylor Swift, except like they've toured America, and so the pipeline of artists coming through for CTS Eventim through Europe is really strong. And so they've cut a heap of costs through COVID. So the margins now are going to be even better. Plus they're rolling out mobile ticketing. They've just acquired the majority stake in the largest French player, so they've got an enormous opportunity there to tie up that market. And interestingly, they're actually also in the US. The SEC is after Live Nation, the biggest player in the US, and so these guys they won the ticketing for the LA Olympics, and so they're actually entering the US market because they want competition. We just think it's a very well run business with founder led, so well aligned management team, dominant industry position, and multiple catalysts for us in terms of earnings beat potential, because we think when we look at numbers, they've had multiple beats already, but we still think numbers are too low. So yeah, that's a stock we're excited about.
Nice.
Love it. I love the, pretty nonchalant about going to the US, and also it's like the biggest event that the US has held in a number of years. So you wouldn't want to screw it up.
True.
Yeah. So we're fascinated by like the research process, and you're looking at however many companies you look at, and you're trying to figure out like which ones are worth going deeper on. What was the moment with this company where you were like, there is something here. This is one that could be special?
So in this case, it was basically, we think this, like the extrapolating that COVID is going to, lockdowns are going to continue forever, and that this business won't survive, and that they won't prosper out the other side. Like it is complete overkill. And I mean, it was basically that the share price had been hit so much that the valuation was just ridiculous. So, and for us, it was, we know the business, we know the industry, we know the management team, and we've been given another opportunity in a stock we loved before, but we just couldn't justify. So that's where the valuation discipline, comes in that was why we sold it. It wasn't because we didn't like the stock and the story. but we got given another opportunity when COVID, threw it out as dead. So that was for us the differentiator was that we thought, no, this business will survive and come out the other side. And interestingly, that massive shift from goods to services that we've seen subsequent to COVID, is obviously massively beneficial to a player like this who's purely selling, that on that services side of the consumption equation.
Mm. So then on the flip side, Catriona, when you're thinking about the risks with CTS, what sort of red flags are you looking out for if you were to have to sell out again?
So, one is that the valuation we can't see any more catalysts. Like, we think the earnings beats are done and the valuation is fully reflecting,
right,
future earnings. So that's like we've run, those two. A red flag can for us can be like value destructive M&A. So M&A can be good and bad. And if they did, because they have a big cash balance. So it's always dangerous when a company has cash sitting on the balance sheet if they don't use it wisely. The backstop you have here is that the founder owns over 30% of the stock. So you'd think he's not going to screw himself by doing a value destructive down. He's very conservative. But if we saw an alarming massive deal that we thought they overpaid on or something like that, that would be a red flag.